As a first-time homebuyer, you're probably looking at an FHA loan. While FHA loans can be a good choice, they come with serious drawbacks. Now in today's video, we'll break down what exactly an FHA loan is, why it might be recommended to you, and the potential issues you should be aware of. Now by the end of the video, you'll have a solid understanding of FHA loans and be able to make an informed decision as to whether or not it makes sense for you. What's up guys, my name is KMAC and I'm a licensed real estate agent in the Dallas-Fort Worth area. But before we get into today's video, if you guys are finding the content on this channel useful, please give us a like, subscribe, and turn on all notifications to always be notified when I release another video. Now let's start with what FHA financing actually is. Now the Federal Housing Administration, or FHA loan program, was created in 1934 as part of the National Housing Act during the Great Depression to make home ownership essentially more accessible to the general public. Now before FHA was established, home loans were typically short-term, anywhere from about 3 to 5 years, and required a high down payment, often sometimes around 50%. Now obviously in 2024, if you were to consider doing a housing loan anywhere from 3 to 5 years with a down payment of about 50%, you would eliminate most, if not 99% of buyers. So you can thank those folks back in 1934 for creating the FHA, because that makes the American dream of purchasing a house today in 2024 actually feasible, because as I just mentioned, I don't know many people that would be buying a house if you had to put half of the money down and paying off a loan in the next 3 to 5 years. Now the FHA's goal was to essentially stimulate the housing market by making it easier for people to purchase homes with lower down payments and longer loan terms. Now this program that was introduced is what we all know as the 30-year fixed rate mortgage, which has been since a standard in the US housing market. Now the program since has had its issues, such as redlining in the 1960s and 70s, and its primary purpose has remained the same, which is to promote home ownership. So how does FHA make home ownership more accessible? Well, first, the credit score requirement is relatively low, usually around 580. And although some lenders may accept scores as low as 500 if you do have a larger down payment. Now this lower credit score requirement makes it easier for people who may not qualify for a conventional loan to secure financing. Additionally, FHA loans require a down payment that is as low as 3.5% of the purchase price, which is more affordable for many first-time homebuyers. Now, FHA loans also typically come with lower interest rates compared to conventional loans, making the monthly payments more manageable. Now, another benefit of FHA loans is the flexibility that they offer in negotiation. For example, when you negotiate with a seller, an FHA loan allows you to ask up to 6% of the purchase price in closing cost assistance, compared to just 3% if you're utilizing a conventional loan. This can be a big help in reducing your out-of-pocket expenses and overall just getting you into a house as cheap as possible. Now, FHA loans are also more lenient when it comes to your debt-to-income ratio, allowing you to qualify for a loan even if you have higher levels of debt. Now, this definitely doesn't mean that you go get an FHA loan and purchase a house if you have incredibly low credit and a ton of debt. Not saying an FHA loan is right for everyone, or purchasing a house as a whole is for everyone. If you have an incredible amount of debt and low credit on top of that, my suggestion first is to save as much money as you can to pay off that debt, to raise your credit, and eventually get to the point where purchasing a house, whether it be with an FHA loan, conventional, or VA loan, makes sense. But first, prioritize getting in a better financial position. Now let's move on to some of the significant downsides to FHA loans that you may need to consider. One of the biggest is going to be the mortgage insurance. Now, FHA loans require both an upfront mortgage insurance payment, which is abbreviated as MIP. The upfront MIP is about 1.75% of the loan amount, which is added to your loan balance, increasing your monthly payment. The ongoing MIP is also higher than what you'd pay with a conventional loan, and in most cases, it's going to be permanent, meaning you'll be stuck with that for the life of the loan unless you refinance to a conventional loan or an alternative option. Another issue with FHA loans is the strict appraisal requirements. Now, the FHA loan has strict guidelines for the conditions of the property you're buying, and if the home doesn't meet those requirements, well, the seller may be required to make those repairs before the loan can actually be approved. Now, this can make it difficult to purchase homes that need a little bit of work, even if you're willing to put in the effort to fix them yourself. Now, in cases like these, I've actually had individual sellers say, no, I'm not going to address that simple fix, and I've actually had the buyer have to come out of pocket outside of the transaction themselves to get that repaired, even though the house isn't theirs yet. So essentially improving a property that's not even theirs, hoping that the seller will continue to move forward, the lender will continue to move forward, and that work that they put on that property that's not even theirs will eventually close on the loan and become theirs. Now, this is definitely not something I suggest people to do, especially if it's something that is a quite substantial repair to make. Now, there are some silly repairs that an appraisal may come back and require you to fix. On an FHA loan, one of those things being wood rot. Let's say on an exterior of a home, a 2x4 has some wood rot. It's a simple fix going to Home Depot, replacing that 2x4 and getting rid of the wood rot, but at times sellers are going to be in a position where they just don't want to do it. And the last thing you want to do is have a buyer not be able to purchase a home over some silly wood rot. Now, moving on to the last issue is there's kind of a perception around FHA loans. Now, sellers and even some real estate agents sometimes view FHA buyers as less desirable because those loans essentially associate themselves with lower credit scores and smaller down payments. Now, in a competitive market, this can make it harder for your offer to be accepted, especially if you're competing against buyers with conventional financing or individuals paying all cash. Now, in conclusion, while FHA loans can be a great option for some home buyers, especially with lower credit scores or just individuals with a little bit more limited savings for a down payment, they do come with some significant drawbacks. It's important to weigh those pros and cons carefully before deciding if an FHA loan is the right choice for you. No matter what type of loan you do choose, the most important thing is you're taking the steps to become a homeowner, and that's something to be proud of. Don't hesitate to reach out if you have any questions. I'm here to help you guys with anything you may need when it comes to real estate.